Out of the Ordinary Insights, brought to you by Investec Specialist Bank.
Joining me now is the CEO of Murray & Roberts, Henry Laas. Thank you so much for your time.
Hello, Bronwyn.
Let's go back a little. You took over from Brian Bruce at a very tough time within the construction industry. Where are we now, and has it been a very tough period for you to negotiate?
I think it has been a tough period, but we negotiated all in terms of a plan that was developed at the time that I took over from Brian, and we're very pleased how we are progressing in terms of implementation. The first year was still a difficult year for Murray & Roberts because we had these loss-making projects.
Namely the car train, one of the biggest ones.
GP MOF, we still had the legacy of the Dubai airport. And we're in the second year now since I took over from Brian. And we always say to the market we will return to profitability as soon as practically possible. And I think this will be the year.
This will be the year?
This will be the year.
Brave statement right now. Has the construction industry changed dramatically since the 2010 World Cup and obviously the fallout that the construction industry experienced after that event? I
don't think, considering the growth that we had at the time of the World Cup, that it's going to be easy for the construction industry to move into a time period for us to experience similar type of growth. Since the World Cup, we've been in a flat period as far as the construction cycle is concerned, and we still find ourselves in this very challenging conditions.
So low margins right now?
It's low margins. You have to compete for each and every order in the market. And if you look at our order book is not growing as far as the South African component is concerned. But we are very hopeful that the infrastructure program of government at some stage will come to market. And we do see some signs of it in the rail program, which has been announced through Transnet and through PRASA. But it does not hold significant benefit to us. We're looking for construction projects. We're looking for new railway lines, for bridges, for dams, for seaports.
Does the fate of the South African construction industry lie in the hands of the government and obviously the taps that come on stream when that public sector expenditure comes to fruition?
I think it is important, but what you will see is that many of the construction companies, they are starting to position themselves from a geographical point of view outside of South Africa. So they do bring in orders from other parts and from other geographies, and Murray & Roberts is doing exactly the same. Our order book is close to 50 billion, and that's where it's been for a number of years. But if you look at the makeup of that order book, at this stage is about 50% outside of South Africa.
And how do the margins differ between work in South Africa and outside of South Africa?
We're experiencing better markets outside of South Africa, better margins and better markets.
Is that because there's less competition out there?
I think it is a function of that, but it is also a function of the opportunity. We just do not have sufficient opportunity coming to market in South Africa. There's not enough work to really keep the capacity that we have in the construction sector, to keep that entire capacity occupied.
While we're on geographies, the Middle East, what is unfolding there? Is the situation now stable in that territory?
I think you can say it is stable, but it's stabilized with very, very little business activity. So the Middle East used to be a very important part of Murray & Roberts. It will never, ever again have that same significance than what it had in the past for Murray & Roberts. So for us as a business, we're still dealing with closing out contracts that we've delivered in the past, the final accounts on those. We have downsized the business in the Middle East, but we do not see that the Middle East will come back in such a big way.
Another red flag was Australia and your operations in that territory. Where are we on that front?
I wouldn't say that Australia was a red flag. It was a specific project that we implemented, the GP MOF project, and that was not undertaken through our operations in Australia. It was part of the South African construction sector, or our construction business in South Africa, that undertook a project in Australia.
So in other words, don't look at Australia negatively because of that one project.
No, don't do that. You know, we're still very confident that Australia as a region is presenting a significant opportunity to Murray & Roberts. It is competitive, but we think the opportunity is good. If you look at what happened since the global financial crisis in 2008, Australia was probably the only developed economy that continued to remain strong during that period. So we believe it's an economy that's underpinned by robust fundamentals, and our projections indicate that up to 2019 at least, there's good prospects for us.
Will you be looking for more emerging markets to operate in, beyond where you are currently situated?
I think emerging markets are important for us, but in emerging markets we will primarily deal with private sector clients in those markets. I think in emerging markets you generally find yourself that you have maybe a little bit less competition, but you also have to be aware of the procurement processes in those markets. And in some of the emerging markets we've got our doubts about the procurement processes and how tenders get awarded. So in those markets, yes, we see opportunity, but I'm not going to say that Africa is the answer to Murray & Roberts.
What does the new Murray & Roberts look like under your leadership? As you say, you've been on a tough turnaround strategy. You're looking to turn a profit this year. What does the group look like in terms of your focus on mining, engineering and construction?
I think it was Winston Churchill that once said that empires of the future are empires of the mind. So we've got a vision for Murray & Roberts and we've got a plan. And I think the leadership team is excited about the opportunity that we see for ourselves. And we have, since the time that I've been appointed as CEO, we have reorganized the business into 5 operating platforms. And I see in the not too far future, there may be some reorganization around that as well. So I see us maybe in 6 to 12 months from now operating out of 4 operating platforms and not 5. But our focus is
You can't give me that detail now.
I can't give you the detail, but the only thing I can say, our focus is on engineering and construction. And having said that, you will see that there's many parts of subsidiaries within the Murray & Roberts group at this stage that do not really fit that definition. So we want to return to our core focus. So we will go through a period of disposal and acquisition. But the outcome of that would be, once the plan is rolled out, that Murray & Roberts will be a company that's strongly focused on engineering and construction work. And we believe that the mining sector, although it's a cyclical sector, it does present better opportunity for return to our shareholders in the medium to long term. So that's an important sector for us.
Before we move on from mining,
Yep.
I need to get your thoughts on the current furore unfolding in the mining sector in South Africa in particular. Do you have any opinion?
Yeah, I do. I think it's disappointing to see what is happening here. It all started off with a labour crisis and the situation around Marikana, and subsequently to that, Anglo Platinum Amplats went through the announcement which Chris made the other day about the reorganisation and the restructuring, and we see the way in which government reacted on that.
Well, government came down so hard on him.
And I just asked myself the question: was that response from government was that wise in the context of investor confidence moving forward? So I don't think that was the correct response. But the local mining sector is in a tough space. If you look at the Murray & Roberts' business in mining, it's a global business. So we see growth in Australasia, in Southeast Asia, we see growth in the Americas, but we see a decline for our mining business in South Africa.
So lucky for your diversification.
Lucky for the diversification, yes. So that mining sector, we believe, is still important as a sector that will present us with good opportunity in the medium to long term. And also the oil and gas sector. Our involvement in oil and gas is for now limited through our investment that we have in Clough in Australia. But we're confident that that market in Australia is still going to be strong. I said earlier on, till about 2019, and we believe in that. And post that, we have lots of hope that the east coast of Africa, all the gas finds and discoveries along the east coast.
Talking particularly Mozambique here.
I'm talking Mozambique. That I believe that will be presenting significant opportunity for us as a business.
In the short term, Mozambique?
No, it's not in the short term.
It's a longer term.
It's a longer term. I think these projects do take a long period before they actually come to market, maybe 10 years or so. So for us, the way that we see it now, we see the opportunity in the medium term, maybe for the next 6 to 10 years in Australia, in all the capital spend that's happening there. Those projects are committed. There's a lot of activity in the LNG market in Australia, and we are actively participating in that. Post the capital spend, you enter into the maintenance phase where all these major LNG infrastructure that's been created needs to be maintained. And these plants have got lives of 30, 40 years. So that would be then a maintenance opportunity beyond the initial capital spend period. But we see that the east coast of Africa may take over from Australia when the capital spend starts to taper off in 2019.
Henry, I'm not going to dwell on the past. This is my last question that refers to the period before you took over at the helm. And Murray & Roberts had earned a reputation of arrogance. Do you think that the culture has changed under your leadership?
I believe so. I think, you know, when you've gone through a period where you had to suffer as badly as we did, there's no room for arrogance. I think the people within the organization deeply felt the impact of the financial crisis that we've been through, and I think there's still, we're proud of what we are able to do, of the capacity that we have. We are proud of the projects that we build and the contribution that we're making to society. I always say to people, we build monuments because our work is there for 30, 40 years, and it will continue to add value over that period to society. So we're proud of Murray & Roberts and of the role that we play in society and of the infrastructure projects that we bring to market, but we are not arrogant.
How are investors reacting to your story now?
I think investors are starting to believe in what we are telling them, and they are starting to agree with our views. But I think the confidence will return after we've had maybe 3 or 4 successive reporting periods. I'm talking about 6 months reporting periods where we actually deliver on our promises. And as I said earlier on, we're confident and hopeful that this will be the year for us to return to profitability. I think we will not disappoint the market with our interim results that will be released at the end of February. And I don't think we will disappoint the market with our full year results. So the results are tracking our plan, and the market is informed about our plan, and I think it's a good story.
I'm speaking to Henry Laas, the CEO of Murray & Roberts. See you on the other side.